everyone. Welcome to MUFG in Conversation, our series dedicated to exploring timely topics with key industry leaders in the innovation ecosystem. My name is Priya Rajan. I'm Managing Director, responsible for national VC coverage at the MUFG Tech Banking Group. Today, I'm excited to welcome Bilal Zuberi. He is general partner at Lux Capital. The fund has over $5 billion in assets under management, invests in emerging science and technology companies. For nearly 2 decades, Bilal has been investing in founders that solve big, important problems across industries: enterprise software, deep tech, healthcare, national security, climate, and many more, and across stages, seed to growth. Prior to Lux, he was an investor at GC, and prior to that, he was a founder himself. Excited to welcome Bilal, and thank you for joining us today.
So excited to be here. Thanks for inviting me.
Awesome. Today's topic, we're going to be diving into investing into the future, the world of AI. Before we dive into the topic, Bilal, maybe you can do a quick intro about yourself and about the fund as well.
Great. So I've been a VC now for 15 plus years. I was at General Catalyst and now at Lux Capital for the last 10, 11 years. And before that, I was a founder, built a company in advanced materials and environmental technologies. And before that, I did my PhD at MIT. And before that, did my undergrad. And before that, I came from Pakistan. So immigrant entrepreneur turned into an investor, investing in things that I think are important to build for the world. Our investment thesis across sectors and stages rests on solving important problems for the world. We like to call it matter that matters. And that happens to range from investing in biological sciences to physical sciences to computer sciences and then some.
That's awesome. And, talking about AI, you've been an early advocate of the power of AI and its future potential. I mentioned earlier, I've seen your panel from way back when in early 2016, you were talking about this topic. And since then, we have seen hyper growth here and especially recent years. How do you look for the most useful insights around AI and how best to creatively think about possibilities at the company level?
So AI is not a new field, as we all know. It's been around actually for decades, but it has gone through several different lives and every life has seen remarkable innovations come out of it. And we're going through a rapid one right now, that became public about a year ago, was known to the insiders of the industry for a few years, that there was this emerging field around transformers and large language models and diffusion models and stuff. That was, basically technological improvements that were happening that were giving outcomes that were unprecedented. And a lot of the excitement you see around AI is that, just, an hour ago, I met with a founder who said, when he first started playing with GPT, he felt it was magic. And I think it is magic and amazing things happening there. But the way we think about AI is not only to invest where the technology is, we see where people are going and spending their time. VCs like to follow incredible founders, entrepreneurs, technologists, where they're spending time. And that would guide us to where we should be spending time. In addition to that, if you think of our investments in AI, they sort of fall into 4 big buckets of problems around the world. First one of them is defending our borders and environmental security. Okay, this is a global need. And if you look at companies like Anduril and Saildrone and others, they're using AI in various ways alongside other systems to provide the solutions to these emerging and very large problems, global security problems. Then there's the democratization of creativity, right? This is allowing everyone to become a creator, taking away those barriers that existed of not knowing how to use certain software and so on. And if you look at companies like Hugging Face and Runway, they use AI to allow everybody to have access to models, to have consumer interfaces, to create beautiful images, videos, movies, all kinds of things. There are literally film festivals being held where the movies are entirely AI generated. It's the same thing that happened when you and I got cell phones with cameras, right? We all became master photographers, and then we started applying filters to it, and we all look beautiful on Instagram. And I think that next wave of creativity is being unleashed. The third one is adding efficiency to the human experience. This has been the task of technology for obviously since the dawn of time. The same thing is happening now. So if you look at companies like Applied Intuition bringing autonomous systems into mobility solutions, or look at how to improve customer service solutions, very opposite end of the spectrum in terms of the complexity of the system that they build. But they're solving our everyday workflows and making it more efficient. And then the last bit is reducing human suffering and improving our health, right? This has everything to do with early detection and diagnosis, where AI is obviously very helpful, to then treatment and therapies and development of novel therapies and novel products. So we were early investors. You talked about 2016. Around that time frame is when we invested in Recursion, which is now a public company, which was one of the early first companies, in my opinion, using AI for pure drug discovery. And now, a person left Recursion to start a company called Envida, which is now also a drug discovery company. We're investors in Icon and Calliope and a bunch of others. So if you look across all of these, what's happening is that people are saying there's this incredible tool set that we can use in so many different ways. Let's use that to unleash our creativity, whether it's in physical sciences, biological sciences, or whatever, and do things that previously were not possible. And use them to not just be gimmicky and be like, oh, I could do this that nobody else could, but actually solve problems. Because if you solve these important problems, you can build great businesses around them, lasting businesses that, for funds like us, right, we're trying to return billions and billions of dollars to our LPs. We have to build businesses that are large and global and solve important problems. That becomes possible.
Yeah, and doing good at the end of the day as well, and a lot of times. Especially in some of the use cases that you mentioned. On that note, just a follow-on question, what are like some of the opportunities related to AI that people, and threats as well, like both sides, opportunities and threats, that people are not talking about, or maybe even like another way, thinking about it in a wrong way?
Look, there's a lot of stuff happening on the infrastructure side of building up the infrastructure needed. This, what models, what data, how to store that data, the compute that's necessary. All of that is very important. So that entire stack is getting built up. And there's new things that are emerging there. People are not talking about or discussing, but it is important, right? And it relates to some of the threats as well. I mean, the fact that we all talk about NVIDIA as being one of the few companies that everybody knows about and uses, it's NVIDIA today is like AWS was 5-7 years ago, right? And every company is using it, but it feels to me like a little bit of a risk at the same time. The fact that we don't have domestic chip manufacturing capacity that is required, and the fact that it sits in South China Sea, where we don't exactly have the friendliest of relations right now with China, that remains a key risk for ourselves. AI is also not something that if we have it, nobody else does. The rest of the world is rapidly developing, in this field as well. So then the question becomes, to the rest of the world, who becomes the exporters of AI-based solutions? Not everybody needs to develop everything on their own, but certainly there will be a fight to be the dominant player in that space. We know that our top tech companies have no way of accessing the Chinese market. Okay? We also know that some of the Chinese products are sold globally. Like if you go outside of the US, a lot of the people regularly use Chinese-made cell phones, right? And some of the, a lot of data is getting captured using those cell phones, drones, and other systems. And that data is not always landing in hands where they have the highest level of ethical controls on how that data get utilized. So we have a lot of these things to think about. My take on all of this becomes twofold. One, you have to look at emerging technologies like this, frontier technologies like this, through the lens of national security. And you have to understand what is happening. How do we make sure that we move fast and continue to maintain our dominance in our leadership? And at the same time, how do we make sure that at least our resources are not being used by potentially our enemies to further themselves? Second is to think of this through the lens of building responsible companies. I've been harping on about this for a while now. Silicon Valley is no longer just building dating websites and games. This is not an entertainment tool only. Even though some of the things emerge as initially as entertainment and games, eventually they turn into things that move people's livelihoods, national economies, governments sometimes topple based on what happens on the internet. So we have to, as a community of builders and executives and board members and so on, take responsibility. We have to build these companies responsibly from the ground up on not only how the technologies are used and secured, but also how we apply the right levels of ethical controls on them and manage how these systems are being used. And it's doubly important because unfortunately government doesn't know about AI themselves, right? People who are in the government do not understand it, and their knee-jerk reaction is likely going to be restrictive and not a positive one for the industry or for the technology or even for our own benefit and good, by the way. So I believe we have to do it ourselves, show leadership, and show that we can do all of this without being biased, i.e. introducing bias into our models, without being unethical, i.e. using data without the permissions that we should be, getting in advance, and creating profits along the way where everybody else benefits from that as well.
Great points. I'm gonna just double click on the AI ethics part. I mean, that's such an important topic. A lot of leaders in AI recently went to Washington, and there's like the evolving regulatory framework, hopefully for the good. How do you advise your portfolio companies to proactively navigate and ensure compliance with those changing regulatory framework, and any advice around folks that they should surround themselves with, like advisors that should be on board, whether helping them through thinking them through AI strategy, the risks, and execution?
There are a few different things to discuss here. Number one, we're one of the largest investors and certainly largest shareholders in some of the most important companies in open source AI and open source models. We're strong supporters of open source because we think that's where the fastest innovation is happening. Open source models are rapidly catching up with some of the largest, most expensive closed source models. Incredible amount of innovation happening there. So we first of all, we believe that that is the right way to do things. Open source does not mean that you don't have, ethical considerations or anything like that. That's crazy. That's never been true, and that's not going to be true going forward. So we think that the second thing to think about is how do you actually think about ethics and responsibility of all the players involved along the way? If the models are biased against people or their backgrounds or ethnicity or whatever, that's not okay, and that's not okay socially, morally, but also may not be okay commercially and financially. These models get utilized in industries where there are compliance requirements. You cannot bias your models or bias your results against a certain population. So we do encourage our portfolio companies to think about it, very seriously, to think about what is your ethics policy. If you're going to be building systems that could be used in weapons of war, what is your, is there an ethics advisory board? Should there be one? Who should be on it? What controls they have or don't have, and so on and so forth. Now, none of this is meant to be, just put a restriction on it and regulate it. I think it's more of a, educate and inform, so and as we like to say, failure comes from failure to imagine failure, and this is to avoid that. The second thing is that the third thing is that a lot of our companies tend, when you're solving important problems, you tend to also in areas that are regulated. If you're in financial industry, if you're in medical industry, if you're in defense tech, there are regulations associated with all of this stuff. So you have to have systems that you can, both conform to compliance, but more importantly, proactively inform where the risks and vulnerabilities in that system might be that could be important. So even for commercial success of these companies, we advise them early on to bring on executives that are knowledgeable about all of this, to understand, what are the regulations that you might have to comply with, what are the certifications you might need in a company. A little bit like every SaaS company now knows about SOC 1, SOC 2 compliance, right? It's not something you argue with. The same thing out of your defense company, you understand ITAR, you understand FedRAMP. The same thing applies, or FDA processes in a pharmaceutical company. So the same things will apply in more areas. So just understand what those are. And then the last bit is international markets. Most of these companies, American, part of the beauty of our technology companies is that they become global companies, and the rest of the world knows what Facebook is and Twitter is and Uber is and Tesla is. The rest of the world is not necessarily going to follow exactly what the US government does either. So we are seeing, good, bad, ugly. We're starting to see certain frameworks emerge globally around regulation of AI. TikTok is banned in India, right? It is because of the surveillance that the app was doing. At the same time, AI regulations in Europe tend to, have recently emerged that, tend to have their own little flavor. And I don't agree with all of the stuff that's being done on the regulatory front. That said, companies need to know how to navigate those waters.
And having the right advisors, such as you guys, and the investors play a key part in kind of keeping them in check as they're kind of growing and scaling and navigating through these changing times? You invest across, you see companies through stages, idea to growth. Today, as we're talking about, every company either is an AI company or is a path to become an AI company. When you're evaluating the company's claim of using AI, what do you look for in like an attributes or metrics, and how do you pressure test it?
So number one, we're trying to build companies that are multi-generational, long-standing companies. They're not trying to, quick flip companies. So they're not like, so they're not like, we are not interested in companies that are like, there's a moment happening right now. Let's build something and sell it to somebody. That's number one, has never worked for us before. Maybe never worked. Certainly not at the kind of scale that is needed for funds of our size. So rather than focus on the hype, we focus on the solution that you're building. We try to understand the defensive moat that you're building around your business. They come in various shapes and sizes. It's not always IP or this and that, but what is the defensive moat that you're building around it? What is the motivation of the team to be building what they're building? What are they trying to accomplish? If it's just to, have private capital fund their research, okay, that's good to know. May not be the right thing for us. But there are many people who are doing something like this. But there are other people who are like, hey, I need to build this because somebody needs this, Salesforce has this gap and they're going to buy a company. That's not what we do. But fortunately, smartest people in the technology industry right now are seeing this as an opportunity to go after some of the hardest problems that were simply intractable before. They're trying to do things that were just very hard to do with the regression tables and lookup tables, right? So they're, using this to say, how can we now go through a shit ton of data that is available in a lot of different sectors and use that effectively to find solutions, and I think that's, we focus on that a lot. When it comes to, the valuations of these companies and so on, a lot of it is, some of it is driven by where the market is right now. And frankly, we've walked away with a lot of from a lot of really good companies saying, we're at the end of the day, capital allocators. We give you capital and then we hope to have returns back. If we cannot see that meeting the bar that we have set for ourselves, you may be a great company, but may not be the right fit for us. So we've done that. But at the same time, we also look at it from the outcomes perspective. So sets of outcomes. Sometimes I find seed founders frustrated that you invested in that company, but not in us. And we say, well, there's a lot of reasons that go into it, but one of those is that when we squinted our eyes and looked at what they were building, we could see a very large outcome. And then you put all kinds of discounts back and bring it back and you say, okay, this is how we will fund it today. But when I looked at your technology, it was like interesting, but not big enough to materially move the needle for a fund of our size. So I think those things start to matter quite a bit. And, good founders are looking for good partners, not just capital. We have, every space goes through a hype cycle when capital becomes, the cheapest commodity. That is not where we play. When that starts happening in any space, frankly, Lux Capital walks out of there. Our focus is where people want partners.
And with the fast changing pace of these companies, especially the innovation that's happening, you've invested. You're close to investing in a company, you kind of checked all the boxes on the ability potential. How do you suggest that they stay ahead of the curve? I mean, there's so many kind of known and unknown factors continuing to hit them. And what would your advice be to how they can stay ahead of what's coming next?
Yeah, so without getting into the known unknowns and the unknowns and so on, I would say two things. One is part of the job that I take on when I take on board roles in these companies is to not so much be a Sherpa, but more like seeing around corners, right? Like a founder who starts a company, in my opinion, has earned the right to make their own mistakes, right? They're navigating a new field. They're doing things nobody's done before. Or at least they're doing them differently than anybody else who may have gone into that space before. So clearly they will face things that I have never faced, and they will make some mistakes along the way. But at least my job is to make sure that they don't make the mistakes that others have made that I have seen or I could see. So help them see what's around the corner so they're at least prepared for that. And advocating for them for the good solutions along the way. The second thing around here is that, the companies go through at least 3 distinct phases in their growth. First is when it's an idea stage company. This is when you have a lot of excitement around this problem I'm going to solve, or this new technology that has come up, or this thing I've invented, or whatever, right? And that's an idea, and you put a good team around it, and people like us get excited about it and want to give money to this. Then you become a product stage company. This is where you have the product market fit. Now, a lot of people think of product sometimes as like the the substantiation or just creation of an idea into something that works. I think of product also including customers, and customers that are willing to pay you something that creates a positive unit economics so you can start building a business around it, right? That's when you're really a product company. And that's where a lot of the companies should be when they raise a series A, B, C, something like that, right? Good product companies then become good execution companies. The companies who are just founders who are like so focused on building a great business. It's not just about playing the startup. It's not about coming up with ideas. It's not about just building a product and finding some customers. It's that whole cycle and then some. It has everything to do with being able to raise the right kind of financing and doing it profitably so you don't need a lot of money, having great customer service, having great partners along the way, creating a machine that can then in return take new ideas through new products, and then it becomes a virtuous cycle. So the goal of companies should be to eventually become those execution machines where you can be multi-product, even multi-sectoral companies when you become platforms, right? So when we think of companies, in technology sector today, like the Databricks, which is one of our portfolio companies, or Stripe, which I wish was a portfolio company, that's what these companies are. They're platforms. If you think of in our, even in sectors that are away from these, like Anduril in the defense sector, or Applied Intuition in the automotive sector, these companies have become execution machines. They have tons of ideas. They've taken through the whole thing. They've delivered it to the market and continue to grow and layer and layer and layer. And that's when they start to become like what we call multi-generational companies. And having founders understand that that's the journey that they're on. So do not get caught up early on in the hype cycles or in optimizing for local minima. That is an important thing that investors can help with.
And thank you. That's great insight. And the last question to wrap this up, the execution stage of the companies that you mentioned, especially the private ones looking to go public. And I know the IPO kind of stalled a little bit for some, and hopefully something opens up more in the next year or two. Where do you see the exit environment, especially for this sector, evolve both as an M&A opportunity and also for IPO?
Yeah, so look, market has decided for the time being that large M&A is a little bit on a hold, just as much as, with few exceptions, but large M&A on a hold as much as IPOs. And part of that has to do with all the antitrust concerns and so on. Part of it is that, what these startups need right now is a lot of money towards compute and capacity, and these companies can provide that, so they can essentially turn their balance sheet into their, cash flow statement. And look, there's going to be M&A in this space because companies will inevitably make build or buy decisions. A lot of focus always goes to the largest companies like the Googles, Microsoft, Amazons of the world. But there's a whole host of companies that will need to figure out what to do down below that, right? If you're a Salesforce, if you're an Oracle, and then, the whole list beyond that, you have to be starting to think about, what kind of AI capabilities I need in-house and how do I expand my platform? So AI is not just a tag along to what I'm doing. So we see, starting in a year or two from now, when these companies that are now just doing 1 million to 10 million in revenues, but they start becoming 30 to 50 million and beyond, then they start to look like real businesses where somebody will say, hey, this is an interesting segment that I need to be in myself. And that's where the M&A will happen. The most important thing in all of this, IPOs aside, because there's a whole preparatory work that happens on IPOs. I'm on 2 public boards that, companies that were a Series A investor in, and then they went public. So that's a separate conversation. But for M&A doesn't just happen randomly. Now, sometimes it does. Mosaic ML was bought by Databricks, one of our portfolio companies, for over $1 billion. And, they've publicly talked about how they met at a dinner and they fell in love with each other. And they said, we want to work together. But But most of the times, you have to spend time with the people who could be your potential acquirers, really build a relationship and understanding of what the needs are so that they actually see you not just as a technology or not just as a revenue line, but they see you as an executive that they want to partner with to be able to build the next phase of their own company, right? And for us who's looking for large M&A, we're not talking about tuck-in acquisitions and acqui-hires, which happen all the time. That becomes very important. Almost a strategic view of a company that is 10, 20, 100 times your size, a strategic view into how you can transform their business. That, when you're able to articulate that and share that and talk about that, that's when that company has to start looking at you more than dollars and cents and more of this is a strategic bet that we're willing to make. And I think we try to help our founders think through that. Like every partner, every channel partner, every customer, is there that kind of a strategic angle for you, or is it just a tool?
Amazing, amazing. Great advice. Thanks again for your time, Bilal, and thank you for sharing such incredible insights. And thank you all for joining us, and looking forward to seeing you soon. Thank you, Bilal.
Thanks so much.